Alright, future traders, in our previous lesson we've already covered what trading is. If you haven't watched those videos yet, I strongly recommend you to go back because without that foundation, things will get harder from here. But if you master the previous material, then it's time to move on to the trader's main tool, the price chart. Every trader on the market begins with the chart. This is our main tool. It shows how the price moves over time, and it's exactly from this movement that we build our strategies. Charts come in many different forms: lines, histograms, dots, candlesticks, and bars. But not all of them are useful for actual trading. Line charts are simple but lack detail. You can see the overall direction of the price, but the real entry and exit points remain hidden. Good for quick glance, but not for analysis or trading. Histograms give a bit more information. They show whether the market is moving up or down, but still too rough to make real trading decisions. Dot charts look neat, but the problem remains the same: not enough clarity to base trades on. So all these formats are more about looking at picture, but we are here to make money. That's why for trading, we only focus on two chart types: candlesticks and bars. Let's start with candlesticks. A candlestick chart is the gold standard of trading. It's clear, informative, and shows not only where the price is moving, but also how it got there. Each candle has a body, the difference between the opening and closing price. If the close higher than the open, the candle is bullish, meaning the market pushed upward. If the close is lower than the open, the candle is bearish, meaning the market moved downward. Then we have the shadows or wicks on the top and bottom. These show where the price moved during the candle's formation. Sometimes it looks like the market tried to break through a level but didn't have the strength to hold it. And all of this is tied to time frames. For example, on M5, each candle represents 5 minutes. On H1, each candle is 1 hour. On the daily chart, a single candle represents a whole day. So by switching time frames, you're literally changing the zoom level of the market. Want a close-up view? Use minutes. Want bigger picture? Look at the daily chart. Bars work on the exact same principle as candlesticks: open, close, high, and low. The only difference is the visual representation. No fill bodies, just simple sticks with marks showing open and close. The information is identical, but most traders prefer candlesticks because they are easy to read and more visually intuitive. So in the end, we're left with two real options for trading: candlesticks, colorful and clear, and bars, clean and minimalistic. Everything else, just forget about it. In the end, it all comes down to what feels more comfortable for you. But remember, it's not about the picture, it's about learning to read the market. Once you start understanding the language of the chart, it stops being just a set of lines and turns into a powerful tool that helps you make decisions and profit.